Leah. Welcome everybody. Thank you for joining us again. This is our fourth, I think, webinar where we're trying to help everybody deal with the corona crisis. Thankfully, we're all going through this together and we're all here to support each other. So it's great to have these opportunities to be helping you. I'm joined today by Simon O'B again. He's the Head of Professional Services and Chief Lawyer at Employment Innovations. He's responsible for the teams that provide workplace advice and outsourced HR services to our clients. He'll be able to address some of the legal considerations around the changes that are happening. And I'm also delighted to be joined by two guests who have a wealth of experience and are genuinely passionate about helping Australian SMEs navigate all things financial, tax and growth related. Paul Meisner is from Five Ways, or sorry, before that, these guys run a very successful podcast called From the Trenches, Real Life in the Accounting Industry. They are here for their clients and for the industry and have a great following through that. Paul Meisner is from Five Ways Group Chartered Accountants and Business Advisory. He's also the founder of Freedom Mentoring and describes himself as a practitioner, podcaster, and pragmatist. David Boyer is the General Manager of Growth at Change GPS, who provide technology to power accountants. He founded Sequel CFO, a network of financial mentors and accountants for entrepreneurs. Welcome, guys.
Good to be here. Thanks for having us, Ben.
Thank you very much.
Pleasure. Okay, so we're going to, over the last couple of webinars, we've had thousands of attendees. Over 750 questions have been submitted during those webinars. We have put together a COVID resource hub, which people can find at employmenthero.com/COVID-19. We'll share that link through chat. So there's plenty there, and there'll be more added to that resource hub after this webinar, just addressing some of the things we touch on. Today, we're going to be going through four major topics. The first is the current packages from the government. Right now, what might be coming down the pipeline. The second is the tax implications of working from home, just some considerations for employees and employers. Thirdly, just general advice for business, revenue, cash flow, and access to capital. And finally, we'll open it up for Q&A. I can already see there's a long list of questions forming in the Q&A channel, so we'll try and work through those. Now, just as we kick off, I wanted to, I guess, deal with the question that's front of mind for everybody, which is the recent announcements, yesterday's announcement, the JobKeeper allowance. And I wanted to, I've seen questions coming through already, which basically really changed with the introduction of this JobKeeper allowance. It changes the legal nature of what's happening between employers and employees. So I wanted to throw to Simon firstly, before we get into the financials, and just talk about what this means for people in terms of their ongoing employment and how employers can approach keeping their employees using this JobKeeper allowance. The JobKeeper allowance. Simon?
Yeah, thanks, Ben. And I suppose the first thing to note is this is all very new. We've got some detail about exactly how the JobKeeper's allowance is going to work, but until it's legislated, there are quite a few unknowns, I guess. But I think you're right. It does change the complexion of being invaded by a small child. It does change the complexion of what's going on in the workplace. All the questions we've been dealing with in the webinar so far, the webinar series, have been, questions about standing people down, redundancies, that sort of thing. Whereas these measures are hopefully going to mean that there are options for employers to retain staff, to avoid those sort of difficult questions about letting people go. I think the detail, we're just going to have to wait and see exactly how that's going to play out. But if it is the case that employers are going to receive this subsidy for their employees, hopefully that means they can make those kind of decisions, you know, to keep people on, the payroll, even if it does mean an agreed reduction of pay or agreed a reduction in hours. If the business knows they have got some of this money coming in, hopefully it means that they can kind of keep the wolf from the door somewhat.
So Simon, sorry, well managed there, by the way. We're all getting used to having the family on most of our calls.
Yeah, I have still got him in a headlock, so I might just eject him from the room and come back to you.
All right, mate. Just while you're doing that, Paul, you asked earlier, you know, what does this mean in terms of, you've had some clients asking, what does it mean if somebody's on a salary, whatever that salary might be, above $1,500 a fortnight, and you want to flip or agree with somebody to move to the JobKeeper allowance, you know, what does that mean legally? And while Simon's not here, I'll put on my employment lawyer cap to answer that question. You still need to agree with the employee to any change in their conditions of employment. So that would be a written agreement agreeing to reduce a salary now down to that amount or any amount above that. But it would be a bipartisan agreement between the employer and the employee that should be recorded in writing. And we do have templates in that COVID resource channel that people can use if they need to formalize those arrangements. Simon, I'm not sure if you're back, but if
while we wait for Simon, I do have my eye on the Q&A box, and I think would you want me to get into the financial side of the JobKeeper, just because as I scroll through the questions, I reckon off the bat I can jump into some of the details on it and see whether we can't tick a few of those questions off right off the bat.
Yeah, go for it.
So look, the JobKeeper, not to be confused with the job seeker payment, which is via Centrelink. Governments love making things sound the same. We are yet, as Simon said, we are yet to see legislation and detail on this. So some of the absolutes around exactly how you're calculating revenue, etc., will need to be talked about then. But basically, the crux of this JobKeeper payment is for businesses where you've had a reduction in revenue of 30%. Now, we haven't seen legislation, so the fact sheet did talk about a comparable period from a year ago. The Prime Minister's speech did talk about a comparable prior period. So while we haven't seen legislation yet, we can probably presume that for businesses that didn't exist a year ago, they are not necessarily held to exactly 12 months ago. We may see a time where you're able to pick a comparable month. Businesses that have had rapid revenue growth will have some issues depending on the legislation, especially if their revenue has trajected quite an increase anyway, even if they've come off 30% from the exact prior month, perhaps if they have to go too far back. One of the questions in there, so this is eligible to be an eligible employer. You're turning over under $1 billion. So let's just say everyone's an eligible employer. You had to have had employees as at the 1st of March. The ATO are using a lot of STP data here. One of the things, as we talk about not only the JobKeeper payment, we talk also about the the other stimulus packages. What I'm telling clients is, if you didn't have someone on your payroll as at the 1st of March, trying to invent them, trying to put them onto the payroll in March or in April or in a subsequent time, is going to raise quite a few questions. A lot of my clients are in the situation where they run the business, they do have staff, but they pay themselves either through a director's fee, which is not through the payroll, trust distribution, dividends, or just drawings. Unfortunately, those people won't qualify, and their pay won't qualify because they weren't an eligible employee as at the 1st of March.
That raises the question while we're on this. So let's just stick with the JobKeeper allowance. It's clearly intended to benefit sole traders, people without technically employees. So there will be a lot of directors who aren't being paid, but it appears that they are eligible. It's intended for them.
Yeah, so this is interesting. The actual the sole trader carve out was where you were running a business through a sole trader ABN. Business owners that are in a company will actually see their income flow to their tax return as a dividend, not through a business schedule. They will see their trust distributions hit via the trust distribution income rather than through a sole trader ABN. The sole trader carve out, which is for people who do run their business through an individual ABN, and they also have to not have other wages on their books. They can nominate one person, but it's unlikely that a business owner operating through a company or a trust would also have a sole business ABN that they're running through. They would be running through their company's ABN or their trusts or partnerships ABN. There is a question in the chat box about partnerships. I guess if you ignore largely whether it's a company, a trust, or a partnership, and just more look at, did you have an eligible employee as at 1 March, whether it was a partnership, whether it was a company, or whether it was a trust, if you were the business owner and you weren't taking a wage through the payroll system, then unfortunately you've missed out in this payment.
Another question there, Paul, was, is it 30% reduction in profit, or is it a reduction in revenue?
So this is pure top line revenue. So you don't have to take out any costs. There's also a question about when we have to go back. And look, there's a lot of speculation, and that probably for me is the biggest question mark I still have, is exactly when we're going to match our monthly revenue, what we're going to base it against. I think that devil is going to certainly be in the detail.
There's
right.
I'm not going to use the word threats, but there's a lot of measures that have been introduced to really discourage people from doing things deliberately to try to access these benefits that are outside the normal course of business. There's in the first 2 stimulus payments, not the JobKeeper ones, they actually went to the effort to put in extra rules for accountants to not promote something considered a scheme. It's really loosely defined as well. So if anyone's trying to think about ways to manipulate the way, particularly directors or people who are running in a trust, if you're looking to manipulate the way that you pay yourself, there's a lot of threatening language around the penalties that could come for that. And I think there's a lot of, when talking to your accountant or your advisor, you got to be really careful that it's their liability on the line for advising you to do that. There are some people who are unfortunately going to miss out, especially, and I can see in the question box, a lot of businesses that are running through a trading trust structure. I think some of those might get picked up by some of the JobKeeper payments, but there's really tightened rules about trying to manipulate this to benefit businesses that just aren't outside the normal course of their business operations.
Yeah. Simon, back to a legal and employment question. I think there's some confusion. What I've seen is there's a bit of confusion around the $1,500 allowance. Is it intended to replace a salary, top up a salary? Do people have to be moved to that amount? What's your reading on that?
Yeah, my reading of of how that works is, if you've got an eligible employee, then you get paid. The employer gets paid the $1,500 per fortnight. Now, how that flows through to the employee depends on how much the employee is earning. So if the employee is earning less than $1,500 a fortnight, then the employer, my understanding is the employer has to top the employee up to that $1,500 a fortnight. So that might arise because, for example, the employee has been stood down because the business isn't open, so the employee might be stood down with no pay. In that case, if the employer gets the JobKeeper payment in respect of that employee, they would pay that employee $1,500 a fortnight. Or perhaps an employee has reduced their hours so that they're earning, say, $1,000 a fortnight. In that case, my understanding is the employer would still receive the full $1,500, but they would just top up $500. And the idea being that the allowance would subsidise the kind of rest of the wages. If you have an eligible employee that earns more than $1,500 a fortnight, the employer still receives the payment. They don't need to increase or anything like that, increase the pay. But the idea is it helps the employer to continue to meet those pay obligations to the employees. That's my reading. That's my reading of it from the information we've had so far.
Thanks. Another question that's sort of coming up a lot is, what about people who don't have cash flow? And David or Paul, maybe you can answer this. You know, if you don't have cash flow today and the payment's not going to come through until next month, how do you deal with that scenario?
Well, some of these payments actually aren't going to come through for 3 to 4 months. So the JobKeeper payments might come through, and the intention is that they flow through to salary for your staff. The stimulus packages in 1 and 2 are probably more than likely just going to get allocated against your BAS. It's very unlikely that a lot of businesses are actually going to get free cash flow from the cash boost payments that are coming through Stimulus 1 and Stimulus 2. When it comes back to managing your cash flow, and it goes back to some of the real basic fundamentals. It's having a look right now at your debtors ledger and working out who actually can pay right now. It's very easy to get very negative right now. There's a lot of uncertainty, and a lot of businesses are doing extremely tough. But a lot have built cash reserves, a lot are in strong positions, and some of them might be your clients. So you can just you just can't be picking up the phone and asking them where they're at and are you able to get paid? And it's like, this is just basic kind of cash flow 101. And I think it's okay when you're in a crisis to think about just what are the business fundamentals. So that's something you can do in your business if you've got debtors that are in there. And a lot of businesses are just doing the stock standard, going through their expense list and trying to work out where they can cut costs where possible. One of the really interesting things that's come out is a lot of loan schemes that have been promoted by the government. And there's 2 main ones, and they're federally backed and state-based. The federally backed ones, the government's allowed for $250,000 loans to be administered by the major banks. Now, these loans have really interesting rules about them. And like every business owner's out there's probably thinking, well, 250 grand's going to save me. If you're a really small micro business, that's going to help you out a lot. Access to them is a little bit easier, I'm hearing, than traditional loan applications. And the banks are kind of ready to do this. They're just similar to what Paul was saying before. Everyone's still waiting for final legislation to come through. So don't get too caught up with headlines that you're getting.
Cool. So on that, let's just come back to some of those other. Sorry, Paul. Go ahead.
Well, I was just going to say, your original point and some of the questions are on the cash flow and the cash flow timing. What I've been saying to clients is, and similar to what David said, in terms of you've got to make the right business decision. You shouldn't necessarily make a business decision based on the JobKeeper payment. There is one change I'd make to that. But what I'd say is, if you've got staff that you're going to keep anyway, and you might cut their hours back, you might ask them to take a pay cut to help out the business, then the JobKeeper payment will support you, will help you keep them on in that way. If you were going to stand them down or make them redundant or whatever you were going to do, my advice would be necessarily to do it anyway. If they were going to qualify for the job keeper payment, you are allowed to, as I understand, rehire them for the purposes of the job keeper payment. But what I wouldn't be doing as a business owner is saying, well, I'm going to keep all these staff and I'm going to pay them all their wages if I wasn't going to anyway, hoping that one day in the future, somewhere around May, I may get some money back. You know, I'd be making those decisions, and if those staff unfortunately need to be let go now, if those JobKeeper payments are going to come back in the future, then we can have that conversation about rehiring them or about bringing them back.
Cool. Okay, I'm just going to launch a poll. There's going to be a few polls through the session. I'll launch this first one, which is, has your business taken advantage of any financial aid or relief, government, banks, etc.? If you can answer that. Now, just while we're waiting for those responses, I think on that last question, the situation I had in mind was more when, let's say that we've stood down people over the last few weeks and they're not currently getting paid, and the job keeper allowance comes in, but you're not going to get that cash. You know, the question is, do you pay them $1,500 from now? And what I've read this morning is that you would, once you do get the money, you are then capable of back paying those employees from the money that you've received from government next month, you know, presuming it comes through next month. So you're not going to put yourself into financial distress, and if you don't have the cash flow, you just can't pay them necessarily anyway, but you can back pay when that money comes through.
And let's be honest, I suppose about this JobKeeper payment is that for employees that you stand down or that you can't support anymore, this JobKeeper payment, if you bring them back for the purposes of that, you're really becoming the payroll officer. There is a requirement to pass on absolute dollar for dollar. As you said, Ben, what I would be doing is saying, well, I'm happy to sort of pause the redundancy or sort of you stood down, but whatever dollar I get from the government, if we're eligible for you as an employee, even an ex-employee, being that you were an employee at 1 March, when I get the cash, you get it, employee, I'm not going to be out of pocket any earlier.
Yeah. All right, I'll end that poll and share the results. So 80% of people on the call haven't accessed any financial aid. 20% have, which is interesting. It'll be interesting to track that over a period of time and just see how that, particularly now with JobKeeper allowance and the government saying that they expect 60% or 6 million employees to be accessing that, or employers to be providing that to their employees. It's a huge number. So unless anyone can see a question there still on the JobKeeper allowance.
Yeah, there's a couple in there. Someone's asked me to clarify a sole trader who runs their business through a personal ABN will qualify for JobKeeper. The point I made about was more around self-employed people who use a trust or a company structure won't be eligible unless they run their business through an individual ABN. There was somebody had a question on I'd said, so sole traders are or can qualify, but self-employed people operating through a trust or a company or a partnership will generally miss out.
And I might throw one more question out there, which is, if you're a startup and you're pre-revenue, if you can't go backwards on because you don't have any revenue, would that rule them out, or would that be deemed to be eligible?
30% less than naught can't be naught, can it? So pre-rev's got some problems. I sort of think I don't see how it can be written in.
What about tax on the $1,500?
It's fully, the requirement is that you fully pay it to staff. You don't need to withhold pay-as-you-go withholding, and you don't need to pay super. Again, we're yet to see the legislation, but as a business owner, if you collect it, you are required to pay it to staff in full. So it is revenue neutral to businesses.
Cool. Okay, well, Paul, David, anyone else got any more comments on the JobKeeper allowance before we move more broadly to the other stimulus measures that are on offer? No? Okay, great. Well, I might throw to Paul and David to talk us through the broader stimulus measures that are available to SMEs. And I know there's a lot of them, so don't expect you to cover all of them, but if you can try and provide our audience with the best overview, that would be great. And there will be some follow-up material again in the COVID materials that will outline this.
I'm trying to answer some of the questions. There's almost a couple hundred of them now. So Paul, maybe do you want to introduce and get started with the cash boost payments 1 and 2, and then I'll have a chat about accessing some of the state and federal based loan arrangements that are in place.
Sounds like a plan. And I believe one of the infographics that may hit the Employment Hero, it was brought to us by Michael Armstrong, an accountant on LinkedIn, who published an infographic and has now been very widely used. So thank you to Michael for that. The cash boost payment, both 1 and 2, we'll just talk about 2 because really it was just expanded. When you lodge your March BAS, your March and June BAS, or if you're a monthly remitter, your March and then April, May, June, you're entitled to, effectively, the government will credit to your ATO account the value of your W-2 figure or your tax on wages up to, initially, up to $50,000. If your pay or if your withholding is below 10,000, you get that as a minimum payment. Even if you have $1 of wages, you will get the minimum 10. The second half of the 50 grand, you would have heard $100,000. If your pay-as-you-go withholding is 50 between now and June, you will get as a credit on your BAS the full 50. Then you will get the same amount you receive of that 50. You'll receive in I'm not sure whether it's at this stage monthly amounts over 4 periods or 2 between June and September. You'll receive that as payments further down the line. But that is the main one. There was a little bit of misunderstanding about being a cash boost. I think a lot of clients were expecting a big novelty check for $100,000 to hit their bank account. It really is a reduction in your business activity statement of the amount.
Paul, that's frozen, or have I frozen?
Oh, can you hear me?
I was getting you loud and clear, Paul.
Okay, all right. Well, I'll keep going and hope that it was just Ben. Hope that everyone got us loud and clear. I'm led to understand that if your business activity statement, apart from the W-2 figure, was going to be a refund, that the ATO will honour the refund of that activity statement, even if you have another ATO debt. The other point to note is that the ATO physical IT system to administer this won't be built until the 28th of April. So refunds or credits to the account won't happen till the 28th of April, which is also the due date for payment of the March BAS for many people. So really it's managing that quite closely.
Yeah. David, did you want to jump into the next section?
Yeah, I think the big thing that Paul said when it comes back to actually managing your business now is that those payments aren't going to come in until the end of April, and that's at the earliest. It's very rare that the ATO sends these things out all on one day. There's a proper capacity problem there. So you got 2 cash flow problems that you got to work out the next month. So getting through to that, I don't think any government money is going to be available over the next month, whether it's through the loans or any of the stimulus measures. The JobKeeper payments, Paul, we've got a first payment date for JobKeeper payments yet?
Yeah, it's 1st of May, I think.
Yes, mate. So it's still a long time that we need to get through. And then you've got some of the government loans. Now, the major loan is a government-backed facility that's being distributed through the big banks, and it's access to $250,000. This is different to a normal loan that you'd apply for. As part of this loan, the loan's being guaranteed by the federal government, not you or your business. So we've had some conversations with banks where director guarantees aren't on the line for this 250 grand. The government's going to be on the line for it, which I think kind of means the government's participating in some of the risk in your business.
50%, David.
Yeah, 50%.
Yeah. So the directors are still on the line for 50% of it.
Correct, yes.
Yep.
And the problem there is a problem with this though that really needs to be considered. And that is that at some point in time, if you take a loan now, I don't think you're going to get that money for at least 4 weeks. If you got your application in today, most banks take about 4 weeks to get those big loans in. And this loan's at a really good interest rate. So those loans, I think, are an option for you if you have done a cash flow and you think that at some point, realistically in the next 3 years, you can pay back $250,000. You just got to be very careful that we don't borrow a huge amount of money now. That's an amount that in the long term, our business isn't able to pay back and support. So then you get to the period, which is the next 4 weeks. And that's what everyone's really panicked about right now. And it's very easy to call up the quick, they're almost like payday fintech lenders. Paul and I really we've got problems with these guys. These are the guys that are going to give you a couple of $100,000 in 24 hours. But they're charging you a massive interest rate. It's something like 120% a year. And we've even seen some lenders doing up to 400% a year. The challenge for every business owner out there is, how am I going to get my cash into business right now? But how do I not make a financial decision that's actually going to bury me in 12 months' time because I can't afford to pay back the debt? And this is sort of like every business owner needs to pull out Microsoft Excel and just do a really quick cash flow to work out the maximum debt that their business could repay, even back when it was operating at 100% capacity. So if you take on too much debt now and you couldn't repay that amount when you were flying, you've got to ask yourself as a responsible business owner and director, is that the right decision right now?
Yeah. Really good advice. Just before you go on, Paul, I just wanted to launch the next survey, which is, will your business take advantage of the recent offerings made by government? So I'll throw that out now, and if you want to continue.
I had a one that often, one thing that I've highlighted with my clients, and sometimes gets lost a little bit in the media cycle of the stimulus, is just want to mention the work that the ATO are doing in helping businesses manage themselves through this time. There is an ato.gov.au/coronavirus website. Sometimes for business, we do talk about loans and we talk about early access to super and JobKeeper, and there's a lot of sort of stimulus payments, but there are 3 things I want to highlight about managing your ATO debt during this time. 6-month payment deferrals on certain tax payments, on lodgements, or on any debt that can be used in quite a smart way. Yes, it's more debt. Yes, you need to be confident you can pay it back, but certainly they're available to you. Payment arrangements currently, if you call up and want to enter into a payment arrangement, they are offering them at without any interest on those arrangements currently, something that is available to businesses that otherwise doesn't get mentioned in the stimulus package. And for any businesses that have paid pay-as-you-go installments in the September or December quarter, installments is a prepayment of tax on past tax, or individual business owners who have had trust distributions or other types of untaxed income and have paid quarterly installments, you can in the March BAS vary these and get a cash refund or a refund of any pay-as-you-go installments or prepayments of tax that you've paid in the past. 3 things that I think, while not necessarily part of the stimulus, are very important for business to help them manage through this time.
I just want to add is that, Paul, there's a question in the group about if you've stood down staff and they qualify for JobKeeper and get $1,500, are you allowed to make them work? Can I address that, Ben? Is that all right? Do you want to get back to the poll?
Yeah. No.
I think Simon can also probably weigh in.
And Simon, I want your legal opinion on this, but there's something that's everyone here is a business leader.
Just let's clarify that none of this is advice. None of this is legal advice.
I'm going to talk about you running your business and you leading your staff. Now, I touched on cash flow before. If you're not doing a 3-month cash flow right now, like, just stop doing it. That's the only thing that's absolutely business critical. The next thing is your staff. And you're getting peppered with questions, am I going to qualify for JobKeeper? But you're a business leader and you need to worry about your culture. And I'm saying in small businesses, and Simon, I'd love you to address the legal nature of this. Staff right now are working to earn less than what some JobKeeper payments are. So there are staff who are earning more to stay at home and do nothing. That will have, in a lot of businesses, a really damaging cultural impact. And some of the ideas that I've heard around to manage this are to bring everyone down by a percentage of hours rather than standing certain staff down. Simon, can you maybe talk about that? Because this is going to need some really smart rostering to be able to pull that off.
Yeah, and thanks, David. I think I think you're right. These sorts of times do call for some sort of inventive and really well thought out workforce planning, and some of the things that we've seen that have worked very successfully for businesses are when a change is implemented, that it's implemented from the top down. So what you're talking about with a reduction of pay of, say, 10% across the business, or a reduction of hours across the business and a corresponding reduction of pay. Where we've seen that kind of accepted and embraced by the workforce is where it's being seen to be applied across the board. I suppose how the JobKeeper's allowance feeds into that is it hopefully does mean that when businesses are looking at those decisions, that there is a little bit more in the pot to help businesses is along with those decisions. And maybe it means that the reductions that they're making are going to be slightly less than before. I mean, I agree with everything that you've said and what Paul said at the beginning about, if you've made a decision that, that there isn't work for an employee to do, or the business can't maintain its current levels of staffing, this might not necessarily change that. But I think it does hopefully provide businesses with a bit more flexibility about the kind of sort of changes and cuts that they're making.
Yeah, Simon, I've got a question just about the physical practicality, I guess, is if I make a business decision to say that I have either a casual staff member who's been with me for more than 12 months, because that's the qualification, or anyone who's part-time or full-time. If I make the decision to say, look, unfortunately, I don't have enough hours for you. I need you to stand down. I can't afford to pay. I might pay out some leave balance. If in May I get that payment, obviously I'm required to pass it on in full. What do I physically do with that person? Do they then become my employee? Obviously I can pay them the payment to stay at home, but to what level, and is there minimum wage applications on how many hours do I bring them back for?
Yeah, it's a really interesting question, because for some businesses, where they're given this subsidy, they pass it on to the employee. They will want that employee to do some useful work for them. If they're able to pay them this amount, $1,500 $1,500 a fortnight, that is going to cover a certain number of hours at the employee's wage. So in a lot of circumstances, I guess it's going to mean that those people can be usefully employed, but in a lot of situations, that's not going to be possible. The whole reason that many businesses are standing people down is because of the restrictions on certain types of businesses opening. Hospitality being one of the sort of big examples. So in a situation where, say, a pub has stood down all its, front of house and back of house staff, if they are getting the payment for the employees, they're not going to all of a sudden be able to give the employees work to do, because the restrictions on the businesses staying closed will still operate. I suppose what it means and what it's designed to do is it will hopefully enable the employer to keep those employees on the books, for the employees to receive payments to keep them sort of functioning and able to sort of feed themselves and buy essential kind of goods, with the idea that when things do recover, hopefully the employees can come back to work as normal. So I suppose it provides an incentive for employees to be stood down, to remain on a kind of unpaid leave pattern, rather than being made redundant, let go, and being kind of completely sort of out the picture.
So I suppose, and that has made it clearer, which is great. So if obviously there's nothing to do because there's no gym to turn up to, hairdresser, etc., then you can't, and they're just ready for when they come back. But I guess if there is work they can do, if there's some other stuff, policies, procedures, some behind the scenes stuff, do you need to be very careful that at their last rate, you're not using them for more hours than you're paying them in the 1,500, I guess?
I think that's right. I mean, there are minimum wage protections which would mean that you couldn't get an employee to work more hours than the $1,500 would cover, but I think equally in these times, if an employee knows that the employer is getting the subsidy and it needs to be passed on to them fully, there would be nothing wrong with employers and employees coming to some kind of arrangement between themselves that for this period, while we're getting this allowance, there'll be a temporary variation to your rate of pay or to your duties or to your hours or whatever it is. As long as those agreements are genuinely agreed and evidenced in writing, we'd recommend, as long as they don't offend the rules about minimum wages, which are found in sort of most awards. I think there is kind of a reasonable amount of flexibility that an employer and an employee could enter into, as long as as I say, it was genuinely agreed and doesn't offend any kind of minimum entitlement rules.
Cool. Thanks, Simon. So just before we move on, the poll results there, I've had them up for some time. 60% of people believe they will take advantage of the recent offerings made by government. 35% are still needing more information. And there's a couple of questions that I've seen come through the Q&A which are interesting and may address that 35%. One of them, just reading from the JobKeeper payment information for employees brochure, I guess, from the government that was released yesterday afternoon. It actually says register an intention to apply on the ATO website and assess that they have or will experience the required turnover decline. So I think a lot of the people in the 35% are questioning, have they lost 30% of their revenue? But the application actually says that they might, or that they expect that they will experience that. And there's nothing preventing them from applying now, even if they haven't reached that 30% threshold, provided that they expect to reach that 30% threshold. The other one that's coming up is the question around tax. And it says that ensuring that each employee receives at least $1,500 per fortnight before tax. And I think the issue here is that if you've got somebody on $80,000 and you're receiving that $1,500, it's not going through direct to the employee. You might continue paying them the salary, and you have to continue taxing that employee based on what they're currently earning. The $1,500 goes to the business. The employee gets paid their salary, their salary after tax. But the $1,500 itself isn't being taxed. You're just taxing each employee based on what they're being paid, whether it's the $1,500 or a salary over and above that amount. Either of those things do you disagree with those or support that?
I think the interesting thing, and Simon touched on this a little bit, but it's worth probably calling it out to make it as clear as possible, is that if you keep a staff member on and you're paying them more than $1,500 a fortnight, you pay them normally with their normal withholding, with their normal super. You just happen to get cash back of $1,500 to supplement or subsidise that wage. If the staff member is being paid under the $1,500 per fortnight because they're already on less wage, or because you've stood them down but they were eligible on March 1, you are required to pay them the full amount. Now, we haven't seen legislation, but we're being told that full amount, if you pass it on, does not have to certainly doesn't have to have super paid on, and we believe doesn't have to have pay-as-you-go withholding paid on it. Business owners are not able to pocket the difference if they collect more than they give to their employee. But if they pay them more, you just pay them normally as is and collect a subsidy.
Yeah. Look, we've got about 10 or 15 minutes left if we go a little longer. Can we move to just any general business advice that Paul and David, that you would recommend? I mean, you've already mentioned the cash flow forecasting. Is there anything else before we move into just straight up Q&A?
Yeah. Well, I think I'm going to keep stressing it because I think a lot of businesses aren't doing it. It's not just doing like your standard cash flow, but there's a lot of stories, and the media are starting to report on the positive stories of some businesses who are innovating a little bit to try to get revenue where they can. And it's not necessarily going back to the same levels that it was, but it's a little, and it's kind of just enough. For a lot of businesses, a lot of the costs are being stripped out at the moment, not necessarily purchasing stock if they're a stock-based business. Obviously, the wages bill is completely changing and being turned on its head. These relate to restaurants who are now employing the entire family to try to help out with delivery services just to try to get money coming in. And a lot of service-based businesses, and this is the stuff like, if you're on social media, it seems like everyone's just taking screenshots of Zoom meetings of how many people are on their meeting at the moment. But this is where people who are running gyms are going out to their member base and saying, well, let's get together for an online meeting. What this is doing with some business models is really interesting. So instead of, and what I've got a mate who runs a gym, what he's done is fantastic. All he's done is said, look, your membership's usually like about $120 a month. I'm going to cut it down to 20, and 3 times a day we're doing group workout sessions. And I'd really appreciate it if you kept supporting my business, because I'm going to get through this and I want to be there to help you at the end of it. And for someone like that, he's had a huge focus on getting his costs down, and then he's changed the revenue model of his business. So it's not the old model where people had to come to a physical premises. It's now resembling more like the technology companies where you have a monthly subscription. It's just how many people can you get through that subscription. And these little things, and they're becoming a little bit, I think, in a couple of months, we're going to have like a new norm of living. It'll be weird, but that's how people are buying a lot of services. And there is a lot of love for local small businesses. Clients want to support them. They want to see you get out there. So when you're doing that cash flow, have a think about some other business models you can do. Some money's better than nothing.
Paul, anything to add there?
I was reading through the questions just so I could, but I think we've answered a lot of. I know. I was trying to get through them. Look, I think the way I've been pitching it to my clients is that the core business decisions of collecting your debtors, cutting your discretionary spending, making staff decisions got a little bit more complicated with the JobKeeper payment yesterday, but really just pivot online, do what you can to protect your revenue, protect your supply chains, get some money in the bank, kind of stuff. That's those core business ideals are always important, but especially now. Manage your ATO debt. I think the options I've given with deferrals arrangements and getting some installments back if those situations apply to you. And then largely the stimulus comes, I think, making a decision based on whether or not you get a tax benefit is always something that, for me, it should be an outcome of what is best for the business, rather than too much of a determining factor.
That's great. All right, shall we just try and spend the rest of the time answering some of these questions? I'll open it up to all three of Paul, David, and Simon, and I'll just there's over 300 questions, so I'll try and find some at random. So if a business is down 30% in revenue, but they are still providing work to their staff, and their staff are still earning their normal salary above $1,500 per fortnight, are they entitled to keep the payment on top of their salary? Well, sorry, are they entitled to the JobKeeper payment on top of their salary?
I think we sort of discussed that, which was if you're paying your staff member, even after cutting their hours, even after taking a pay cut, if their salary that your business wants to keep paying them anyway is above $1,500, you pay them as normal, and you keep, as a business, the $1,500 because you're paying them more. It's only if you're paying that staff member less $1,500 that they have to get the full $1,500.
Yep. Okay, here's another one. Is the employee required to have been with us for 12 months or more?
Full-time and part-time staff, no. If they were a long-term casual, they do need to have been employed for 12 months, as I understand. Yep. Simon's nodding.
If they're under 12 months, they'll be picked up by some of the other measures, because they're essentially be classified as an unemployed. So there's other measures and government stimulus packages to help out those staff members.
Yeah, it's an interesting point. The difference, the delta between the JobKeeper allowance and typical unemployment benefits or job seeker / new start is pretty large. I was looking this morning, and it's about $500 a fortnight from what I could see. I think there are 2 one-off payments of $750, which help to bridge the gap. But a lot of employees who have been stood down would be a lot better off with the JobKeeper allowance than alternative government benefits.
Do you think that some businesses stood down too soon and some employees have missed out, or some employees got made redundant too soon and they're missing out?
Yeah, there's definitely a lot of, I think Simon, you've probably dealt with a lot of matters, but we've seen a lot of people stood down. We've seen a lot of people made redundant, and this allows employers to make good with their employees. Well, not make good in that they did it for bad reason, but bring them back in. And that would also imply that they need to balance up the books. I mean, a lot of people would have paid notice periods. They would have paid out annual leave entitlements. Like a whole bunch of stuff needs to be undone again now if you want to put people back onto the JobKeeper allowance, which would be very preferable. But yeah, it's got some complications. Simon,
do they need a whole new employment contract, or can you just act as if it never happened?
I think I don't know whether I'd say you can act as if it never happened. I mean, you could, if they're coming back on the same terms and conditions, you should be able to just reissue what the contract they've had before with the date changed, or perhaps a kind of simple letter saying that your previous terms and conditions will apply. But I agree with everything Ben said. It does pose some complications if you know you've let someone go, you've paid out all their entitlements, and now they're coming back. But I think the way the package is being announced, it is encouraging employers to do exactly that. It's made it clear, my reading anyway, that if they were an employee on the 1st of March and you rehire them, then if you meet all the other eligibility criteria, you'll get the payment in respect of that employee. So I think it envisages a situation where people have been let go and they come back.
Ben, can I share a message that maybe isn't the most uplifting, but I think it's absolutely critical for small business owners at the moment.
Please.
Some businesses aren't going to survive this, and it sucks. It absolutely sucks, and maybe it might be yours. It's very appealing over the next 6 weeks when cash flow is really tight to dip into your own money and put your own money into your business to try to get through and to try to survive. Scott Morrison's telling us this could last 6 months. Some businesses, the right thing to do and the responsible thing as a director is to have a chat to an insolvency professional and have a chat about what your options are, because there's been a lot of changes to insolvency laws. And I think as a business community, if you choose that path, I think as a community, we need to make sure that we don't judge people too harshly who choose that path, because you're entitled to protect the wealth that you've already built so far through your business. And it is a responsible thing as a director to consider that option and make that very hard option. There's fantastic new rules holding deed of company arrangements. They're going to let you go into a pause mode and potentially start back up again and rebuild back up. And personally, I'd rather be doing that, with my home loan mortgage at the level it is now, than maybe, the few $100,000 I'm going to pour into a business that may not survive anyway. So it's really important to look after your family and your family's position right now.
That's a fantastic message, David, and I think it's really important for people to pay attention to that. I've just run another poll around drinking and whether or not you've increased your alcohol consumption. That's not a joke. It's actually, I thought the response would have been higher, to be honest. I know that a lot of people I know are probably drinking more because of the stress. And that's why in the coming webinar sessions, we're going to really focus on 2 things. One is managing. So on Thursday, we have Alex Hadding, our people and culture leader, who is, ex-Yahoo, ex-Google, very experienced at human resources and people management. And then next week, we have a doctor, the head of the Sydney Anxiety Clinic, working with us on those issues. So we will sort of move over the next week or so to sort of start addressing some of those psychological issues, which again, we're all going through together. And these webinars give us the opportunity to help everybody at the same time who are largely dealing with exactly the same things. Guys, is there anything else
There were 2 more questions in the question box that I think have sort of come up a couple of times that I just want to go back to. One is, there was a question about not-for-profits and charities. They have been included in the definition of eligible businesses for some of these. So do have a look. And that leads into my second point, which is, this is very much based on, to dial it back to a really simple information, rather than talking about, is it business owners or employees or whoever, it's have a look at the last pay run or the last few pay runs in March. Whoever is on that list is your starting point. if you're not on that list, business owners often are that. So let's not worry about trust distributions or dividends, or if you're not on the pay-as-you-go withholding list or the pay run list, then for a lot of these cash boost, job keeper, you don't qualify. And there's a lot coming about the casuals. And as much as I'd say the two biggest questions we as a profession, I think, are yet to understand fully is how will the reduction calculation happen under a number of circumstances? Starting business, high growth setup, being in business for not 12 months, etc. You know, that's something we're going to have to come back to. And I think the other thing that there's a lot of questions is around what constitutes a contractor being employed for the 12 months. And I think that especially around their part-time, perhaps where they're seasonal, that to me, we may see that a little bit in the legislation, whether or not you can prove that that person had one shift outside of 12 months earlier, maybe that qualifies. So those are two questions that we're going to get a lot. And I think that the answer is going to continue to be wait for the legislation.
Simon, do you any views on, I mean, the definition of casual? Do you think that that'll be applied here? Any views?
Yeah, I think, as Paul says, we're just going to have to wait and see what the legislation says. I mean, there's various definitions of kind of different types of casual employment in the Fair Work Act. You know, a regular casual is not someone that has to work every week. It doesn't go into that level of detail. It's about you know, whether they're employed on a kind of systematic basis, whether it be once a month or once a week or once a fortnight. It usually looks at there being a regular pattern, not the amount of actual hours they do. But you know, we just simply don't have that kind of level of detail of how they're going to define sort of regularly employed casuals. Yeah.
I guess one thing we can take from the Prime Minister's announcement yesterday is that the government does expect 6 million people to be covered by this scheme for the next 6 months. You know, it came across to me as they were being very generous, and they intend for this to cover as many people as it should and as it can. $130 billion expense item is obviously intended to help a lot of people. So hopefully that does open up coverage as much as it can. Look, we're a little over time now. I just want to say a massive thanks to Paul and David. I have a huge amount of respect for you guys. You are, you know, real supporters of the SME community. I've said it before that, you know, the 70% of businesses, 70% of employees are employed by SMEs. 99% of companies are SMEs. We are a hard community to get together and a hard community to support because we're so spread out. But these guys spend, you know, this week alone, they're doing multiple webinars. If you don't already follow their podcast, please follow From the Trenches. It's not only informative, it's also very funny. But thanks, guys, for taking the time out to attend our webinar and for all you do to support the Australian small business community. I can't thank you enough.
Reach out on LinkedIn. If anyone wants to follow other posts, feel free to reach out on LinkedIn too.
And if you are going to listen to From the Trenches episode, we did a fantastic interview with Ben a couple of months ago, which was Ben's business story is amazing. If you're looking for some inspiration in these dark times, Ben's story is right up there.
Cheers, mate. Thanks everybody for attending. Please know that you are part of a community and that everybody at Employment Innovations, that these guys on the call and Employment Hero are doing all we can to support you. We'll be back on Thursday with another webinar with Alex Hadding. And as I mentioned earlier, we are also lucky to have a doctor, the head of the Sydney Anxiety Clinic, joining us on, I think, Monday or Tuesday next week. We'll confirm that with an invite. But I think that will be particularly important for people to attend, so they can help their employees and themselves. We look forward to catching up again in the not too distant future. And thank you, Simon, as well for your input.
There you guys.
Thanks, Ben. Thanks, everyone.
Thanks all.
Cheers.